Hi everyone and welcome to Rock Report. Here we host commodity experts and company CEOs to give our audience a good foundation in their research and due diligence. Before I announce my guest, please take 5 seconds of your time and subscribe to our channel. It will really mean a lot to us. And today's guest is Principal Analyst for Benchmark Mineral Intelligence, Mr. Federico Gaston Gay. Thank you for joining us.
Thank you so much for the invitation. Pleasure to be here.
Let's start with short introduction of you and what are Benchmark Intelligence all about.
Well, thank you so much again. My name is Federico Gay. I'm a geologist by training. I've been with Benchmark for over a year and a half now. So what does Benchmark do? Benchmark is a business intelligence consultancy. So we do or specialize in everything from we have a mine to grid approach. So we cover everything around the lithium ion supply chain from the mining perspective, processing side, cell, recycling, and EV cells.
Excellent. Today's topic is lithium, and we will cover it from multiple angles. Maybe we should start with the big picture, with the supply and demand. What are the key drivers of global lithium demand in the next 5 to 10 years, and how do they compare to historical trends?
Well, 5 to 10 years is a very long time for the lithium cycles. At the moment, according to our expectations, we are heading to a oversupplied market this year, and we're expecting an oversupplied market in 2026 as well. Longer term, the picture changes a bit, at least. So we are expecting a deficit by the end of this decade. The reality as the market evolves and the different players from both supply and demand are constantly changing, we are expecting this deficit to grow constantly from 2030, 2031 onwards.
So the deficit is definitely here and it's coming and it will get bigger, as you said. How are current lithium supply constraints impacting the market and what are the strategies our producers using to address them?
For any person who follows lithium, known that lithium prices are relatively low. It depends, low compared to, of course, the high prices we had in 2021, 2022. Historically, the prices are relatively decent prices, I would say. But the reality is that because of this decreasing in prices, particularly in 2023, 2024, and 2025, the last few months and 2024 in particular, we had some curtailments or mines put under care and maintenance or decreasing their guidance output for this year and 2024 as well, and that generated some curtailments as you mentioned. This happened mainly in some operations from Australia, some from China, and there were some delays in projects from the US, from Canada, in South America as well. The reality is that if we take a snapshot of like 2 years in the past, we think, our numbers say that we lost roughly 9% of the expected supply in 2024. We lost it, and this year we lost something compared to our previous vision. But the reality is still we are expecting an oversupply market because demand is lower as well.
Understood. Which regions or countries are emerging as a new sources of lithium supply, and what challenges do they face in scaling production?
I think the big surprise was Zimbabwe, particularly in the 2023, 2024 years. The production, the output there grew considerably. Even more than what was originally expected. They managed to ramp up operations quickly and create new mines, build new mines quite rapidly, which is uncommon for the mining side. Other regions that are or countries that are growing quite considerably is Argentina, in particular in South America, and I think those are the main drivers for new output. But more established producers, as Chile, for example, they are all already ramping up their current operations as well, so they managed to produce more than before.
Yeah, you've touched on the lithium supplies a bit a few moments ago, but how do you see the balance between lithium supply and demand evolving by 2030, not 2035, let's
Mhm.
say 2030, particularly in a light of electric vehicles adoption rates?
Well, it's a very rapidly changing landscape. If we take a snapshot of 5 years ago, which 5 years in an industry is not that long, but 5 years ago we have the demand represented or was sourced 40%, around 40% was coming from industrial uses, and that includes metallurgy, pharmaceuticals, etc. And for example, ceramics. Now that represents roughly 11%. So, and the actual demand on nominal numbers have been increasing, but the reality is that the landscape, particularly for EVs, for battery demand from EVs and ESS usage, has been growing exponentially, and that's how what is changing in the landscape. And we expect battery demand to continue increase by double digits on the next 10 15 years. So the real driver for demand is batteries, will continue to be batteries, and we expect, for example, by 2030 batteries will represent roughly 94% of total lithium demand. And from the battery demand, I'm saying battery too much, we have three main segments. One is EVs, which is the main one, and by 2030 we're expecting that will represent 80% of total battery demand. And then we have ESS, which is mainly related to renewable projects, for example, for the energy storage solutions or any energy storage system for renewable projects that is growing as well exponentially during the next, lately and during the next few years. And that will represent roughly, 15% of battery demand. And the rest is portables, your cell phones, laptops, etc.
Yeah, let's take a little bit of geographic context here. How does the lithium market balance differ between key regions like Asia, North America, South America, and what factors drive these differences between those countries, continents? Sorry.
It's a very complex image to explain. So we have mainly extractive countries, as Australia, for example, which they produce spodumene or mainly spodumene concentrate that is shipped elsewhere for processing, and that elsewhere is mainly China. Uh, South America, for example, it's they don't have a midstream or downstream segment at the moment, so they are also considered extractive countries or region, and they produce, for example, spodumene concentrate from Brazil and lithium chemicals, and we are talking about carbonate and hydroxide from Argentina and Chile. Um, so we have a different picture. So as I mentioned, Australia, South America are mainly extractive regions, and it all or most of it flows through Asia for processing and the cell battery production, and more downstream even for EV production. And the main countries are China, of course, and there's an important processing and cell production from Japan and South Korea. And then we have North America and Europe, which they are trying to grow throughout across the supply chain. At the moment, the extraction side is a bit delayed, extraction side, but there's some processing and some cell and battery and car manufacturing in place.
Yeah, you mentioned that China dominates lithium processing and battery production, as we know all that. How does that impact, I mean, the pricing, primarily the pricing?
Well, they have the negotiating power, that's for sure. And that, if we compare it to other commodities or the other metals as copper, aluminium, nickel. I mean, all the processing or most of the processing is done in China, and they do have some negotiating power and some pricing power to say where the prices are heading. And lithium is no different. So the reality is that at the moment there's a strategic disbalance between the supply and the final demand, and most of it goes through China. So they do have some power, and we believe, for example, or some sources believe that at the moment they are maintaining artificially some mines, and I mean artificially because they have the vertical integration for some operations, for example, and even if the mining side is operating at a loss, they manage to cover these losses throughout the process, or the vertical integrated
That's
process.
very interesting. I didn't know that actually, that they are running some mines artificially just to keep the monopoly, right?
Yeah, it's there can be a lot of questions. Yeah, but probably
In a
they
one
want
way, let's say.
one way. I think there are several caveats of why they are doing that. One is mainly or possibly to keep the power on the supply chain, but as well, yeah, they have the negotiating power. That's probably mainly it. Yeah.
Interesting. Federico, what are the key implications of export restrictions or trade policies in lithium producing countries like Australia and Chile on a global market balance?
So at the moment, Australia and Chile, they have relatively their let's say the outflow or export policy is quite open, and they depend on export, and most of them flows through China. So they do keep their options open, let's say. And fortunately, both countries can sell both to, let's say, China and Western economies. So they do not have that problem at the moment. But if we talk about, for example, North America or Europe, there are some restrictions of importing certain materials from uh, unwanted geographies, as let's say China. So that it's complicating their uh, long-term plan for domestically reliance of strategic resources as lithium, if they decide to continue their borders closed to certain materials.
Okay, so would you say that North America and Europe, you mentioned those two, are they working to reduce the reliance on Asian lithium supply chains? And what progress has been made or will be made in the upcoming period?
Yeah, they have been working. They have been working hard, and I think, for example, in the last few weeks, we've seen the European Union releasing a list of strategic projects that they want to fast track and potentially help or aid through funding. But the reality is that there are several bottlenecks to be surpassed before, securing the domestic reliance. The processing side, for example, if you want to build a processing site for processing lithium chemicals, it can take 2-3 years. But the reality is that the permissioning and the building time for a mine, for example, can take eight anywhere between 8 to 15 years. So the main bottleneck might be on the upstream, on the mining side, but as well there are several funding, several know-how, and several permissioning difficulties throughout the lithium supply chain. So yeah, it's a complex situation.
Yeah, you mentioned 8 to 15 years to build a mine. So how much does it take in China, for example?
Well, the 8 to 15 years is everything from, let's say, from the permission, from when it's
Discovery.
discovered to the actual like mine being operated. In China, it takes much less. They are more flexible on in some cases at least,
Environmental side, probably.
environmental standards, but they also work into really tackling the supply bottlenecks. So when there's a will, they make things happen, while in the Western economies, we are slower to react to certain needs.
Yeah, bureaucracy is killing every progress. The bureaucracy always kills. Federico, I would like to touch on technology as well. What advancements in lithium extraction technologies, for example, direct lithium extraction, are most promising for improving supply efficiency and sustainability?
So just to break down the total supply, most of the lithium production actually comes from traditional sources, which is mainly hard rock, which is more than half of the lithium production comes from spodumene, lepidolite, and other hard rock sources. And then we have evaporation, typical evaporation assets, mainly from South America and some from China. And these are considered also tradition. We understand how it works, and it's a very straightforward process. So we currently understand it. But as you mentioned, there are new technologies, and these unconventional sources, as we call them, are mainly DLE, direct lithium extraction, which can be mainly from three sources. There are some, but it's mainly from geothermal, oil brines, and also from salt flats, but with DLE. So there are no evaporation ponds, which take a lot of space. But also there are some other sources, as particularly in North America, for example, clay assets, which are linked to, or the processing is similar to the spodumene production, for example, but because of grades and because of certain geological conditions, there are some variations. So yeah, I mean, there's a lot of interest, particularly on DLE, and there's a huge potential of covering or partially helping to close this supply gap that we're expecting later in the next few years.
Yeah, how are innovations in battery chemistries, such as solid state of lithium iron phosphate batteries, influencing lithium demand and market dynamics?
It's really changing the landscape, and if we go back 4 or 5 years, the reality is that by then we expected lithium hydroxide to be the king of the lithium chemicals. And lithium hydroxide is used mainly in NCM batteries, which are preferred in Western economies, particularly in Europe and North America. Um, but the reality is that in the last 3 4 years, there's been a lot of improvements in the LFP batteries, which are mainly led by China. An LFP batteries uses mainly carbonate, lithium carbonate, for their construction, and it has changed the landscape quite massively. And actually, we are expecting carbonate to be the leading chemistry in lithium in the foreseeable future, at least. Uh, all these can change, and there are always new technologies that I wouldn't say threaten the future of lithium, but we hear a lot, and particularly in the last few weeks, about sodium-ion batteries or solid-state batteries.
Yeah,
So
please expand. That's my next question, actually, about sodium ion batteries. Are they a threat to lithium?
I wouldn't say it's a threat. There will most likely take a market share in the future, but the reality is that we are still early days for these emerging technologies. And the reality as well is that when we are expecting them to be operational, let's say, or come into force, um, we will be most likely deep into a lithium deficit. So I don't see them as competition for lithium. I see them as aid for the needs of battery demand that we'll have back then. And just to provide a bit more context, if we are talking about lithium, and we are today in lithium, and it's a known technology. It's proven, it's improving a lot as well. Efficiencies and the costs are improving, but we know, or we've been using lithium batteries for more than 50 years now, and it took more than 50 years to get us to this place. So sodium ion batteries and solid state batteries are newer technologies, and they will most likely take some time for developing, for testing, and for understanding the costs and the building the supply chain around it to really make a dent into the lithium demand or battery demand.
Yeah, what about environmental challenges, regulatory challenges that are associated with adopting a new lithium extraction or processing technologies? How are you viewing that?
There are many, and a couple of questions ago, you touched the bureaucracy is killing the Western development of lithium mining, and bureaucracy is low and it's slowing, and it's a very large bottleneck for developing lithium, particularly mining in the West. But as well, it's needed because we need of sustainable mining to really make the case of energy transition. So it's there must be a balance there. Probably we are too much on the restriction side, but I think it's important, and the controls are very important. But yeah, there's still, as I mentioned, if we take 8 to 15 years to approve a project, 2 or 3 cycles will pass by then, and then you have the investment. I mean, you had certain opportunities that you missed, and the reality is that in the meantime, China is advancing with their projects, is advancing with the processing side, is advancing with the battery solutions. Uh, so yeah, at the moment, I think we need a faster reaction from Western economies or Western, yeah,
Agreed,
government.
agreed. Let's talk a little bit about EV market. How closely is lithium demand tied to EV market growth, and what scenarios could decouple those trends?
Yeah, as I previously mentioned, at the moment, battery demand takes 80% of total. Sorry, it takes the majority is coming from EVs, and that won't change in the future. Even though ESS is growing as faster rhythm than EV, the EV segment, the reality is that it's coming from a smaller or shorter base. So yeah, still EVs will be the main driver for demand.
Okay, what impact do government policies and subsidies for EV have on lithium demand forecasts?
There are a few other metals more directly related to policies than lithium. So the reality is that for energy transition to be a thing and for lithium to prosper, it needs of policies that support it. Because in order to make the case for EVs, we need a huge investment into charging stations, for example, and that's a very one of the main limiting factors at the moment. We need EVs to be affordable, and in order to be affordable, for example, at the moment, subsidies are a very positive thing for securing or increasing the penetration, let's say, of EVs into the automotive market. So policy is everything, because if we don't solve the question of how do we see the energy transition in the future, if we don't support the energy transition, EVs will likely not grow at the rhythm we needed. And I mean, oil and gas will continue to be the main source of energy, the main source of for fueling our cars, and so policy is paramount importance.
That's a very good point. Federico, how are automakers securing lithium supply for their EV production, and what are the risks actually of vertical integration of long-term contracts?
Particularly when we saw 2021, 2022, the market was in a state of shock because we realized back then, after the COP26, we realized energy transition is the main objective of the global economies. We need more lithium, we need EVs, etc. So there was a state of shock and let's say a market run for getting all the lithium you could need because there wasn't enough at the moment. And that's why, or that's one of the reasons why lithium prices went up considerably. But at the moment, learning from those lessons, we see most of the OEM, most of the battery makers, of the cell manufacturers, they are securing the feedstock from or via offtake agreements, and those might be long term, even 3-4 years. And that is a way of saying you have cushion of the feedstock you need for your business to grow. And I think that's a very sensible approach, and I think that is working at the moment. But as prices have been lowering quite considerably during the past few years, the pricing formulas that these both sellers and buyers use will play a major role in how successful and how reliable and how let's say stable this feedstock and the relationship can be in the future.
Yeah, understood. Are there any specific EV market segments, for example, commercial vehicles, luxury models, driving disproportional lithium demand?
Of course, the different segments in the battery demand side will use or will have different lithium intensities. I mean, for example, buses will require more lithium than a normal car. But at the moment, the EV segment for regular cars, like commuting cars, it's the main driver because that's the where the most of the demand comes from in terms of volume.
Sure. Federico, final question. How do fluctuations in EV adoption rate, particularly in key markets like China, Europe, and the United States, affect lithium market stability overall?
A lot. I think I mentioned the importance of policy. And one example is Germany, for example. Germany is a pro EV country, and they have been doing a good effort on like charging stations. And there was a subsidy up to through 2 years ago that has been revoked on December 2023, if I'm not mistaken. And that led to a sharp drop in EV sales in 2024. So subsidies at the moment, because the reality is that the EV battery it's very resource consuming in terms of cost. So at the moment, if we get a regular car and a EV, usually, and there are some exceptions, but usually EVs are more expensive. So there are two ways of saying it. In part, it's a premium segment of which is sought after, particularly Teslas and particularly known brands. But at the same time, it's for some segments of the population, it's price or budget. Well, there are some budget limitations, so they cannot afford a EV. So subsidies play or help to bridge this gap. And for example, in northern countries, they are doing an excellent job in fostering or the adoption for EVs, and it's working quite well. So it depends on the country, but there are some very good examples, and there are good examples of when subsidies are not longer there or are not there, the penetration rate is well not growing as fast as needed.
Yeah, we covered a lot today. This was actually a small lithium school for investors. I want to thank you for all your analysis over here. That was Federico Gaston Gay. Federico, once again, thank you for coming to this show and look forward to host you again.
Pleasure. Until next time.